Welcome to Grahall Online. My name is Bill Byrnes, a consultant at Grahall Partners, and I appreciate you joining me today to learn a little bit about a part of our practice at Grahall. We're going to start out in the general topic of talent management, and then we're going to drill down a little deeper and go into a component of that for recruiting, and then a much finer segment of that for executive recruiting. So that's what we're going to talk about today. My hope is to share with you some points of information so that you as executive and a potential client for an executive search firm will have a little bit more information, a little bit more power, and perhaps get a little bit better deal with the firms that you hire. We're going to talk about values, and those are three values. The value of integrity, the value of service, and the value of value. What do you get for your money? So let's drill down on those a little bit further. With respect to integrity, remember, every time you hire a consultant, that person is an extension of you and your company. Everything that consultant says and does in the marketplace reflects on you. Think about the number of contacts that an executive search firm is going to make on your behalf. So obviously you want to have those candidates that are appropriate, that are excited about your firm and pleased with it. And just as importantly, but in a different way, you're going to want those candidates who are not considered to have a good feeling about you through their interactions with the search firm. So the next is service. And as the client, it's your responsibility to define your expectations. Those expectations then become the consultant's objectives. Their job is to give you what you're looking for at the best possible price. And if those objectives are not met, I'm not sure the consultant has really earned their fee. Service, second key business value. Third, value as a sense of what did you get for your money. Fees should be rational. They aren't always. And they should not be simply formulaic. That is, here's a percentage, here's the compensation, therefore that's how much money you give us for doing the search work for you. Because the relationship between the candidate's compensation and the value of the service that the search firm provides are not linear. After that compensation of the candidate continues to go up and up and up, if you're looking at $500,000 or $1 million, there's nothing that says that fee should go up with it. That fee should start to tape off and drop off. So we're going to talk a little bit about that as well. Now, to get a little bit more particular about the best practices in executive search, and that's the relationship between you, the client, and the executive search firm. The key points you want to touch on is who does the work. Talk about the research that the search firm does on your behalf. We'll talk a little bit more about off-limits. What does that mean? Why is it important to you, the client? The next is pricing. What makes it rational? What makes it irrational? The next item we'll talk about for key points and best practices is a fixed fee versus a floating one. The second last will be reporting, and the last are guarantees. So let's drill down into those a little bit more. Question of who does the work. How many times have you had a search consultant in your office trying to get your business for an opportunity that you have to hire an executive, and you're very impressed with the individual, they send you a contract, you close the deal, they begin their work, and all of a sudden you find that the person that you met, that you liked, that you talked with, that you looked in the eye and that you shook hands with, is not the person doing the work. You've got to make sure that the individual that you like and strike the bargain with are also going to be the one that's driving that and be the key project manager for your search. So don't let an executive search firm hand your work off to one of their junior people. It should only be and primarily executed by the senior consultants in that firm. So the next practice that we're going to talk about is research. So basically what research for a search firm is to going into the labor market, identifying the industries, the disciplines, and the individuals that are targeted not just as potential candidates, but as sources for those candidates. Fundamental research means at the beginning of every search, that search firm is making a key and significant and original investment in looking for the best candidates for your opening. So make sure that there's fundamental research for every search assignment you give them. The next point is off limits. Off limits refers to the restriction that an executive search firm has in sourcing candidates. And what restriction would they have? They can't go to their clients where they have a current search or they've had a recent search and pull employees out of that prior client to give to you. That means they're off limits. I remember an experience that I had working for an investment management firm when I brought in one of the major search firms. And the point that that consultant made was, you really should hire us because 20 of the top mutual fund firms in the country are our clients. I had to tell that person that unfortunately we wouldn't be able to strike a bargain because I didn't want to start recruiting from 21 and below because those first 20 were off limits to them. So make sure when you have a discussion with the firm that you get them to tell you what their off limits are, and that will be either their current clients or their most recent ones. Pricing. Is it rational? Not always. First thing that you should demand in talking to a search firm, and by the way, you ought to look at 2 or 3 for every search that you do the first time if you don't have those relationships established, is talk to them about their fees. So many times you'll find a search firm will say, well, our fees are 33% of base and bonus, and that's the industry standard, so that's what we charge. Sometimes they'll even throw on 10% for an administrative fee, and I've never figured out what that is, and you shouldn't have to even worry about it because don't let that get into those contracts. So if a search firm really wants your business, they should be positioning by your demands a discount to the standard industry fee. If it's 33% for the industry, ask them why they can't do it for 30 or below. And particularly when we're looking at higher paid executives, think about, let's say we're looking at 30% of a $250,000 a year job. 3 times 25 is $75,000 as a fee. If that job is at $500,000, is it really going to be a $150,000 fee? Or if the job is at $1 million, should it really be $300,000 as a fee? As the targeted compensation goes up, as I spoke about earlier, the value of the service the search firm provides starts to drop off. It doesn't move in a linear fashion with the compensation of the candidate. So make sure that for those higher priced jobs that the fee drop, the percentage fee drops even further. So the important thing is to make sure that you're getting the best deal for your money. And the final point with respect to rational pricing, make sure that there's a relationship section put into those contracts. That is, when you first hire a firm, you're expecting them and paying them to learn about your company, your industry, your disciplines, your competition, the labor market in their industry. So you're paying for a part of their learning, and that's fair, I think. The question is, what if if you're pleased with their work and you give them another search in 6 months? Haven't you already paid for that front-end learning? So there's no reason for that second fee within a relatively short period of time to be at the same percentage as the first one. It ought to be something less. They ought to give you a credit for that relationship and encourage you to continue to do business with them. So, rational pricing. Fees at a discount to the competition. Percentage fee drops as compensation for the candidate goes up, and relationship pricing. 3 important points. The next matter with respect to fees is whether there should be a fixed fee or not. Search consultants love to have that 33% on whatever you pay. And one of the things that I'm sure you're aware of is you may expect to pay $250,000 a year. Rarely do you get someone coming in for $225,000. More likely it's $275,000 or $300,000. The important thing is to make sure that if you have a fixed dollar fee and you determine that at the beginning of the search, then whether the final candidate you hire makes $250,000, $275,000, or $300,000, you know what your costs are ahead of time. It's fixed, the dollar fee. So make sure that it is not variable based on the compensation of that final candidate. The beauty of that is that there's no supplemental invoice. Now, some people might say, what if I pay less? That's fine, the fee is still fixed. If I pay more, the fee is still fixed. Make sure that you don't fall into that trap. Reporting. Too few clients demand consistent and continual reporting on that search. Some people consider it magic. Oh, we can't tell you all of this. This is intellectual data. I can't be sharing that with you. That's not true. There ought to be a couple of key activity reports that occur, and one of them is how many people have they approached in the marketplace. Particularly if you're looking for a CFO, you don't want to talk to just CFOs. You want to talk to CEOs. You want to talk to board members. You want to talk to consultants at the audit and tax firms. So when you're trying to triangulate and find the best candidate, very likely that number of people and the kinds of people that are sourced are not just potential candidates, but references and sources for your perfect candidate. So get that activity. How many people did they talk to? How many did they review? How many did they interview in the phone? How many did they meet in person? How many did they present in you? So those activities, and over time, and I think it's always over time you're going to then see what kind of effort they're putting into it. Also, another key factor on an activity report is to determine how long has the search been running? How many business days? Start from a Monday when the contract is signed and just keep counting until that job is filled. So activity tracking is very important. The second kind of report that I think is valuable that you should demand and your search firm should provide is candidate tracking. So after they've presented you with some candidates, and hopefully that presentation does not mean their pretty cover sheet and then the candidate's resume, there ought to be a lot of information, a lot of analysis that goes along with that to support them presenting that candidate to you. So candidate tracking should be really their job. When did they meet the candidate? When did they talk with them? When did they present them? When did you respond? So for each individual candidate, if they're not keeping track of what's happening with those candidates, then very likely your search can drag on and go off track. And then the last is simple ad hoc reporting. When you call, when you email, when you text them, you should get virtually an immediate response. So reporting, make sure that you incorporate that into the discussion and into the services agreement with that consulting firm. The last is guarantees. Some people might say, well, it's too soft a discipline. I can't guarantee you anything. Again, don't accept that as a response. You're the client. Your satisfaction is what should be guaranteed. Not I guarantee what I'm going to do for you, but I guarantee that you will be satisfied. That's an overarching business principle, and make sure that your executive search consultants follow it. So remember, if you want retained executive search with invoicing and payments contingent upon your definition of performance, not the passage of time, put in some of those guarantees. What might they be? Maybe the first invoice ought to go after they prove to you that they know what the job is. They have proven in writing that they know who you are, what your competition is. They've defined the skills, the performance measures. When they prove to you that they know the job, maybe that's when the first invoice ought to be sent. Maybe the second invoice ought to go when they've sent you 2 or 3 candidates that you think are right on target. Those people may not be hired by you. You may not even decide to interview them, but if you say that's exactly what we're looking for, then maybe that second invoice can go on. So they've proven to you that they know what you're looking for and that they know how to find them. The third and final invoice really ought to be based on when that job is filled. So many firms will hire, and they tell you it's standard again. First invoice goes out when the contract is signed. Second invoice goes out in 30 days. And the third and final invoice goes out in 60 days. Now, that's the passage of time, because their computer can count is not rationale to invoice you. So make sure that you set performance standards and milestones before you allow them to send you that invoice. So there's 1 or 2 other guarantees that you can put in there, and that has to do with making sure that candidate sticks. You do the selection, but they do the presenting, and you're paying them a lot of money to do that work. So with respect to a guarantee, make sure that you have one in there that says, if this candidate leaves for any reason within the first year of their start date, that the search firm will replace that position with a new candidate at no additional services fee. Now, there might be some expenses that they would incur, and that's rational, but make sure that you have a replacement guarantee in there at least for a year. The final point is we spoke previously about off limits. So many times the search firm will say, if you haven't given me a search within the last year, then I can go steal your people. 1 year doesn't seem like enough protection for you. I would suggest you look at 2 or even 3 years. Some firms will do that because they won't raid their clients. I've even had some search firms say, your year is up, you better give me another search or I'm going to go after your candidate, after your employees as candidates for someone else. You should be safe from being raided by the firms that you pay to learn about you. So in summary, what's the key point that I want to make? When you're engaging an executive search firm, you, the client, have more power than you think you do, so use that power to get the best agreement. Thank you for your time today. I appreciate spending a few moments with you. If you'd like to learn a little bit more about some of the topics we discussed or challenge me on them, please give me a call at the number you see on your screen, and also, if you'd wish, certainly send me an email. Again, thank you for joining me. Good day.